What is the RDSP and do you qualify? The Canadian government will give you up to $90,000 in free grant money. Not a loan. Not a tax break. Actual cash deposited into your account. Most people who qualify have never even heard of it. And their banks never told them. I'm Grant Maple. I found out about this program on my own, not from a financial advisor, not from my bank. I had to piece it together myself, and that's why I started making these videos. RDSP stands for Registered Disability Savings Plan. Think of it like a savings account with a massive bonus. You put money in, and the federal government matches your contribution with grants and bonds. In some cases, they match at 300%. That means for every dollar you put in, the government adds 3. Here is who qualifies. You need to be a Canadian resident, you need a valid social insurance number, and you need to be approved for the disability tax credit. That last part is the key. The disability tax credit, or DTC, is a certification from the CRA that says you have a prolonged impairment in physical or mental function. It covers a wide range of conditions. We are talking physical, mental, developmental, learning disabilities, and many chronic illnesses. If you or someone you know already receives the DTC, you are likely eligible for the RDSP. Now here is where it gets interesting. The government adds money to your RDSP through 2 programs. The first is the Canada Disability Savings Grant. This is the matching program. Depending on your income and how much you contribute, the government will match between 100% and 300% of your deposit, up to $3,500 per year in grants. The second program is the Canada Disability Savings Bond. This one requires no contribution at all. If your income is below a certain threshold, the government deposits up to $1,000 per year into your RDSP automatically. You do not have to put in a single dollar to receive it. The lifetime cap on grants is $70,000. The lifetime cap on bonds is $20,000. That is $90,000 in government money available to you over the life of the account. There are a few things to know up front. You have to be under 50 to open an RDSP and start receiving grants and bonds. The money is meant for long-term savings, so there are rules about when and how you can withdraw. If you take money out too early, you may have to repay some of the grants. That is called the holdback rule, and I will cover it in detail in the next video. But the most important thing right now is this. If you qualify and you do not have an RDSP, you are leaving government money on the table every single year you wait. The grants and bonds are calculated annually, and unused years do not come back. So to recap, the RDSP is a government-supported savings plan for Canadians with disabilities. If you have the disability tax credit, you likely qualify. The government will match your contributions up to 300%, and if your income is low enough, they will add money even if you contribute nothing. If you want the full breakdown of how this works, including the grant tiers, the bond thresholds, and a step-by-step walkthrough, I put everything into a guide called the Canadian Income Investor's Playbook. The link is in the description.